to Rick. It's Wednesday.
It is, Megan. That it is.
I know, I'm sorry about that yesterday, but it is what it is. We're here today, and it's probably for the best because the Fed just met, the infamous meeting of the month. Tell me what's happening. What happened today?
Well, good timing, actually. Let's see. So, we were anticipating this move for the last month at least with the Fed. The markets always anticipate the Fed decision well in advance. It's not, so when the day of that decision, it's not like, oh my gosh, what happened? The market kind of already knows what's going to happen. And they know that based on the indicators from the last few weeks and what's going on in the economy. And so the Fed's biggest issue is they got two big issues. The one is inflation, right? And so how do you control inflation? Well, you control inflation by raising interest rates. Well, the flip side of that is that creates the other problem potentially, which is, guess what? Recession. So the Fed has a big job on their hands. So how do they give us a quote unquote a soft landing on this recession while not raising the rates too high or too fast to cause the recession to crash down, the economy to crash? So it's a fine balancing act. The reality with this Fed, and by the way, I'm not a big fan of this Fed chairman, Jerome Powell. I'm just not a fan of this guy. He missed the mark earlier this year about the inflation numbers. And so they were well behind that curve early in the year. And that's why we had this rapid increase in rates, because typically they'll bump rates on a Fed meeting, 1/4%. Yeah, minimal, no big deal. Well, then they had to go to 0.5%. And now they're going to a 3/4%, almost went to 1%. So they're ramping this up pretty quickly right now to really dampen that inflation number, because it really is not a good number right now.
Mm-hmm.
So with all of that said, it's important to know for homeowners and for consumers. I wish I could see this every day. Here's the most important thing. Guess what it is? Turn off the news. Don't read the news. Don't buy into it, because they're going to hype up all of this stuff. Now, of course, the headline on the news today, they raised the rates 0.75%, and panic sets in.
Right.
It's important to know this. We are in a typical economic cycle.
Mm-hmm.
And what that means is inflation does at times, it has the last few months, it gets out of control. Well, we raise the rates. The flip side of that, though, is as we get this inflation under control, that drives us a bit into a recession, because when you have these rates go up, people stop spending money.
Mm-hmm.
Right? They're buying fewer washers and dryers, and they're spending less at the grocery store. You know how that goes.
Mm-hmm.
So as that economy slows down, that pushes us into recession. So how do you get us out of recession? You lower the rates.
Yeah.
So it's a typical cycle of the market. The thinking now is that because the Fed has increased these rates at such an aggressive pace, they're at some point, possibly fourth quarter this year, more likely first quarter next year, start dropping those rates a little bit.
Mm-hmm.
Discount rate. So I think we can anticipate probably in January, thinking ahead. Who knows what they'll do, but maybe a 1/4% drop. The first drop to kind of test the waters a little bit.
Right.
So this is a kind of a typical cycle. So don't let the recession word get in the way of our thinking. These interest rates. And by the way, speaking of rates, as the market's been going through this process today, the MBS, which is mortgage-backed securities, which is how mortgage rates get priced, is in rally mode today. So guess what? The Fed discount went up 0.75% today, and the mortgage rates went down a little bit.
Right.
And the reason for that is because now the economy is saying, or the markets are thinking, well, we're getting inflation under control. No need to have rates go up. So that's kind of the balancing act of the markets.
Mm-hmm.
I was reading an interesting article yesterday. I didn't know this. With respect to consumer spending.
Yeah.
You know that Walmart is the largest single employer in our country?
Oh, wow.
They employ,
no, I did not know that.
Yeah, they employ 1.6 million people.
Wow.
They represent 1% of consumer spending. Is that a crazy number? So the market kind of follows what Walmart's doing. So Walmart released some numbers this week showing they were slower on their sales, they had more inventory, so on and so forth.
Mm-hmm.
That's the way the market's going to follow really Walmart's lead with respect to some of that consumer spending. That's a huge number. 1.6 million employees. Crazy.
That's huge.
Yeah.
Here, everybody's worried about Bill Gates buying all this land and controlling the food supply, but it's Walmart.
I know they own everything. Own everything.
Oh my gosh. Okay, well, that's good news for the market. And
Yeah.
people just need to understand when the Fed meets and they raise the rate, it doesn't necessarily mean that the mortgage rates are going to go up. Like you said, it's the market is reacting to this control of inflation and the rates are rallying. So, don't, I was actually, when you said to turn off the news, I had just been looking at an article that came through and I should have kept it. Silly me. It was from like realtor.com. And you should have seen the headlines on this email. It was like, it was so all over the place. It was like, things are bad, things are good, things are bad, things are good. Oh,
Yeah.
here it is. I'm going to read you a couple headlines really
Okay,
quick.
cool.
And this is from realtor.com.
Okay.
So it starts off pretty soft. It said 4 DIY jobs that sellers should stop doing. Okay. Looks like it's going to be a pretty good email. Here we go. Pending home sales tumble as more buyers get priced out. Then it talks about the housing shortage. Then it says realtor.com index track housing market still rising. It's like, it's all pandemic rescue, concern shift from inflation to recession as rate hikes loom. It's like,
Mhm.
okay, everybody just take a deep cleansing breath. Okay, just get the information and make an educated decision. Anyway,
Yeah.
all right. Well, I appreciate your insight. I'm looking forward to, I like how things are very under control right now. I'll give you a quick update. Houses, they have 1 or 2 offers. People are getting their offers accepted. They're buying houses and they're not traumatized. So there you have it.
Well,
Looks good to me.
you're right. The key term there was they're not traumatized.
Yeah.
Finally, right?
I know, exactly. It's like, this is the moment we've been praying for here. So,
That's a good thing.
okay, good. I appreciate you. You have a wonderful rest of your day and we'll see you next week.
Take care.
Take care.